What's up guys, it's MX Style. This is how it's going down. In this episode, I'll be bringing to you 4 pieces of crypto news. I'll be talking about Ebang, a crypto mining company, talking about India, what's going on in the DeFi space, as well as a Bloomberg price prediction. So without further ado, let's get into the video. So first of all, we have Ebang. If you guys don't know, I've only recently heard about them, but essentially if you want to look them up, they're on Trading 212 and they're basically a crypto mining company, and they're looking to expand. In the last few years they haven't been that profitable, mainly because it was a bear market, but now they're looking to set up crypto mining farms and they're also a crypto mining exchange. So I think it's a definitely good opportunity investment, especially if you don't want to own Bitcoin itself or any cryptocurrencies, but you want exposure to that market. So it's something to consider. So Ebang hits the NASDAQ IPO running with ambitious expansion plan. The Chinese crypto mining company Ebang has yet to see a positive net income in 2020, but an IPO might give it a jump start. So on June 26th, Chinese firm Ebang was listed on the NASDAQ global market under the ticker Ebang, becoming the second Bitcoin mining manufacturer to go public in the United States Stock Exchange. The company intends to secure up to $125 million in offering and follow up with ambitious enlargement, namely its plans to open up a cryptocurrency exchange and mining farms. So what does going public mean for the mining player? And will the cryptocurrencies follow suit? It's hard to say really, but given that they haven't been as profitable in the last years or so, I'd say maybe monitor it for upcoming months, upcoming years, and just see how it's doing. If it's performing well and it's holding its value, then it might be a viable investment opportunity. So from the telecoms equipment to Bitcoin mining, according to documents Ebang filed with the US Securities and Stock Exchange Commission, the company launched by Dong Hu, its current chairman and CEO, claims to sell communications and access to network devices and other related equipment. Ebang over the last few years has been having revenue issues. Over the last few years it's been falling and was disclosed in the SEC filing. Figures from an earlier period were not revealed, and the firm qualifies as an emerging growth company. So it is very, very early days, guys, but as we know with startups or anything that's early on in adoption and development, if you invest and it is a successful venture, then you will see a rapid return on your investment. So it talks about its expansion plan. So Ebang representative told Cointelegraph that the company has major expansion plans, intending to fill a more unique niche in the cryptocurrency industry by continuing to manufacture Bitcoin mining equipment while also diversifying its operations by setting up a cryptocurrency trading platform and its own mining farms. So in addition to this, it said that it would also explore how blockchain is applied to financial services, education and healthcare industries, which I think is very, very interesting. Acorn was also looking to do something similar in the fact of education, financial services and industries. So hence it's getting listed on NASDAQ as a cornerstone for Ebang's expansion plans. So the last time I checked, it was trading for around $4.99 per share. So if you guys are interested, check that out on Coinbase. Next up we have India. So India acts slow to accept cryptocurrency industry despite RBI's bank approval. So I have told you guys about India and how they're going back and forth with approving Bitcoin and whatnot. So it's a bit confusing if you're in India itself, or if you're just trying to follow the market even. Anyway, the repeal of a blanket ban on cryptocurrencies in March by India's central bank, the Reserve Bank of India, has been boon to the thriving crypto industry in India, with the launch of new exchanges being the catalyst. So the regulatory uncertainty means that repealing the blanket ban was not the ultimate solution that most had hoped it to be. Even after the repealing, there had been incidences of banks declining to process crypto transactions. However, there is more regulatory clarity in the industry now than there has been in 2017, where the degree of skepticism and confusion was high. So there was a rumor that there was a note that was moved within the Ministry of Finance for interdepartmental construction regarding the draft law that sought to ban cryptocurrency related activity with a heavy fine or a jail term of up to 10 years for offenders that had been swirling around, but it's recently been debunked. Corporate advisory firm AKM Global said that if the law gets passed in its current form, it would completely decimate the crypto industry in India. So it's weird to see that they are going back and forth. It is quite confusing, but hopefully they get this sorted out. So the reluctance by banks means that in addition to RBI, a few private banks have been reluctant to process cryptocurrency transactions for various firms in the industry. However, there has been speculation as to why that is, and it could be for a lack of understanding and knowledge of the industry as seen with government bodies. There might be, however, a deeper conflict of interest at play here. Banks will always be against this industry globally, but if crypto comes in action, peer-to-peer transactions will eliminate the need of third-party bankers. Banks in India are unclear as to how to treat Bitcoin transactions. They clearly don't want to get their hands dirty when cryptocurrency regulations are not in place, but also RBI had not removed or issued new circular which tells the banks to start working with crypto companies again. I can't really decipher this. It's a bit weird to follow, to be honest, but I'm just reading it to you because I don't know, some of you guys might be in India or something. So blockchain technology, cryptocurrency and transparency are what ledger technology offers and should ideally be a no-brainer for India, where corruption and bribery are rampant, penetrating all walks of life. However, the potential has been marred by the lack of understanding and distorted portrayal of the facts by mainstream media, with a focus on the illicit activities that originate in the market. Indeed, in India, the crypto industry seems to be growing, and the increase in interest is measured in terms of volume and the number of users in the leading cryptocurrency exchanges in India, like WazirX, which is acquired by Binance in 2019, and BitBNS, CoinDCX, and yeah, those are just to name a few. Just one final quote: the Indian cryptocurrency ecosystem has been rapidly growing ever since the Supreme Court struck down on RBI's banking ban. It's basically like free PR. We're seeing steady growth in user signups every month. In fact, in India, the crypto industry is very optimistic about the future of crypto. The equity returns for 3 years is negative. The FD returns have gone down from 8 to 9% to 5.5% over the last 5 years. So the rupee has depreciated by over 20% with respect to the dollar in the last 2 years alone, by over 100% in the last 12 years. That's crazy. Imagine living in such conditions where everything is, like you get paid. It's just, it reminds me of this film I watched yesterday, In Time, with Justin Timberlake, where essentially the currency is time, but the rich people, they live forever, and the poor people, they die. It's just really sad. And essentially, as the poor people get their pay rises, everything, there's mass inflation, so the price of coffee and all other services, it goes up. So essentially, it just keeps the distribution of wealth how it is, and there's no change. It's a very good film, actually. I would recommend it if you guys are into that. So the latest report by Bloomberg analyst Mike McGlone contends that Bitcoin is consolidating. He speculates that due to the decreasing volatility, Bitcoin price and Bolivarians are its lowest ever. So in terms of consolidating, that just essentially means that this is an accumulation phase and everyone is buying it. So it's getting closer to gold. So McGlone observes that Bitcoin's volatility relative to the same metric for gold is at its lowest since the record bull run in 2017, which is below the average. Essentially, Mr. McGlone saying that the Bitcoin price volatility has been the lowest since 2017, so it's just primed for a big move. Which way, we don't actually know, so we just have to stay tuned. Alright guys, so this is the last piece of news, and this is about Comp's DeFi token. If you guys know already, the last video I posted was about DeFi, so if you want to check that out, that'll be somewhere here or here. And anyway, let's get into the article. So Compound's Comp token paves the way for DeFi yield wars. Like I said, I've made a video on it, so check it out. The Framework Ventures co-founder believes Compound's token launch jump-started a trend of DeFi projects competing for yield as public interest and token prices rally, which is definitely true. If you look at this website here, it's called DeFi Pulse. It gives you the overall statistics and dominance of the different DeFi tokens, and you can see Compound is at the top here. It's just been on a tear. In the last day, it's gone up by nearly 2%, and its dominance at the moment is around 38%, which think of Compound as, you know, the DeFi equivalent of Bitcoin, I guess, in terms of the dominance, not in terms of like the fundamentals, just in terms of the dominance. But back to the article. Recent events surrounding the launch of Compound's token seem to have been noticed by many other projects in the decentralized finance or DeFi ecosystem. In an interview with Cointelegraph, Framework Ventures co-founder Michael Anderson said that the token's success may provide an example of how to follow for other DeFi projects who may start engaging in yield farming wars. I don't actually know the current yield for Compound. I would need to look into it, but I know others such as, you know, Cardano, you can stake on their testnet for around 10%. That's the only one that I know. I'm still looking into it actually, because I'm new to this, guys, so bear with me. So the result of this will be increased interest in the DeFi space as a whole, Mr. Anderson argues. So some of the effects can already be seen by skyrocketing valuations for other tokens like Aave Lend and Synthetics SNX, pricing in future success. So Anderson compared Compound to a mid-stage startup that's hitting revenue growth, which generates a lot of interest in the traditional investment world. You assume that operations and the effectivity of revenue grows, meaning that eventually they can become as profitable as some of the big Googles and Facebooks that come through that big transition. So according to him, investors in Compound tokens are believing in what could happen and how the DeFi space could, you know, provide realistically a $1 billion valuation. So further to this, that sets up a cycle that basically venture capitalists feed into. That further sets up the virtuous cycle for venture investors who see Andreessen Horowitz's initial stake of 40 million balloon to 2.5 billion. What the fuck, man? From 40 million to 2.5 billion. That's crazy. So if you guys are interested in Compound, definitely check that out, because I'm gonna have to invest. If this guy's made 2.5 billion from a 40 billion investment, and DeFi hasn't even blown, it's just in the early stages. So that's just crazy. So decentralized exchange Balancer has already launched a similar incentive scheme and saw a valuation skyrocket. Its incentive scheme reportedly gamed by the FTX exchange, and the project informally enacted a change to curtail this. Balancer. So in terms of Balancer, yeah, Balancer's top 5. As you can see, guys, all of these DeFi tokens, they're all based on Ethereum. So that means that if this was to pick up the DeFi space, that Ethereum's value would shoot up, because essentially these use Ethereum, they lock it away in cold storage, therefore decreasing the supply and increasing the demand for these tokens and overall Ethereum in general, meaning that, you know, given time, you should see a good return on your investment. Interesting to note that there's only one DeFi token that is built on, you know, the Bitcoin network, and that's the Lightning Network, but I don't know too much about that, so I don't want to speak on it. But anyway, guys, that's been the video. I hope you found value in this. If you've liked it, then make sure you hit the like button and subscribe. I'll be coming to you regularly, or I will try to come to you regularly with more videos. I'll try to also put the articles in the description. And yeah, have a lovely day. See you. I'm out. Bye.